You mentioned my $170,000 prediction, so I just want to go into that with you for 30 seconds. That's a data-dependent prediction. Go back and look at Bitcoin halving cycles. The day that the Bitcoin halves, multiply it by 4, 18 months later, and it's been uncanny that that's been the price of Bitcoin. So I'm using a $35,000 number at the halving. If I'm, and that's conservative. You're correct. That is conservative. Let's say we're at 50,000 in April. Okay, then it's a $200,000 handle. Let's say we're at 60,000, it'll be 240. But my long-term price target is that Bitcoin gets to easily half the market capitalization of gold.
Skybridge Capital founder and former White House Director of Communications Anthony Scaramucci is exceedingly bullish on Bitcoin, the world's largest cryptocurrency by market cap. While attending the just-concluded annual meeting of the World Economic Forum last week, Anthony gave what he describes as a data-driven prediction for the leading crypto asset. The Skybridge Capital founder said he believes Bitcoin's price could hit $170,000 next year, even if it maintains current levels going into the halving event in April. While Anthony's prediction may be considered conservative in certain quarters, he has explained that this is his base case for Bitcoin in 2025. Plus, it's a data-driven prediction derived from previous cycles. During an interview with Reuters in Davos, Switzerland, Anthony said, "Wherever the price is on the day of the halving in April, multiply it by 4, and it will reach that price in the next 18 months. If Bitcoin's at $40,000 at the halving, where it roughly is right now, it'll be $170,000 by mid to late 2025. During the interview, Anthony also underscored the importance of the historic approval of 11 spot Bitcoin ETFs by the U.S. Securities and Exchange Commission. The Skybridge Capital founder explained that the ongoing weakness in Bitcoin's price is caused by investors rotating out of the grayscale Bitcoin trust into the new ETFs, but everything should settle once the GBTC outflows slow and the new ETFs really get going. Earlier this week, Anthony had an insightful discussion with Scott Melker. During the interview, he discusses his predictions for Bitcoin, institutional investment in the ETFs, and why he believes Bitcoin could go 10x from here. We will now bring you clips from the interview. As we do, please take a little time to like this video, subscribe to the channel, turn on post notifications for more videos, and don't forget to drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Let's say we're at 50,000 in April. Okay, then it's a $200,000 handle. Let's say we're at 60,000, it'll be 240. But my long-term price target is that Bitcoin gets to easily half the market capitalization of gold. Gold now at about 14.5 trillion. If Bitcoin goes to 7 or 8 trillion, that's a 10x from here. It's a $400,000 Bitcoin. And I think it would be ridiculous for people not to understand the asset, not to understand the dynamics of it as a store of value, and not to have a position. One last point, if you don't mind me saying this, we were the first money into BlackRock. I think I broke it on your.
You did.
I broke it on Wall Street's. We gave BlackRock the first money last January. They converted successfully into the ETF. They have not even started the marketing process. And as you know, these 11 ETFs, this was the best ETF launch in ETF history. So we have some sludge going on with the Grayscale Bitcoin Trust. The real experts know that. But when that sludge clears out, you have clear skies ahead for Bitcoin, and you have a lot of demand for Bitcoin. You have institutional demand finally for Bitcoin because it's now an asset that's wrapped in something that the hoi polloi can understand and that the institutions can now be comfortable buying. So all of those things hopefully make me wrong about my prediction to the low side. But let's just say this. People need to get in there. They need to understand this asset. They need to work harder to do the research on an asset like this. My thing about this, because I was an FA and I have distributed product into these wirehouses, they're cautious, they're slow moving, but when they get there, it's going to be overwhelming. Okay. And remember, this is a fixed supply asset. So, you know, I mean, Jamie Dimon said something, and I watch his interviews very carefully because I think he's very smart. But he said, you know, Satoshi is going to press a button and it's going to create another 21 million Bitcoin. And okay, but that actually mathematically and from a
It's literally
programming
impossible.
analysis and from a decentralized point of view, it actually cannot happen. But to say that, it either implies you're joking or it either implies you don't have the expertise or the awareness, And so I don't know. Maybe he's got the regulators on him, and he doesn't want the regulators on him too hard, like the Elizabeth Warrens. Uh, but I got to tell you, it's not an informed view, and it's shocking because if you said to me, "Who is the smartest person in financial services?" He's got to be in the top five. I mean, he's done an unbelievable job at that bank, unbelievable job navigating the global financial crisis, unbelievable job of being there at the right time with the right core assets. I mean, the bank never really shook or got knocked into insolvency. But I mean, this thing, I think he's just really missing. And then when you talk to the guys there, they're like, yeah, well, we're spending hundreds of millions of dollars developing.
Jamie Dimon's actions and remarks concerning Bitcoin and crypto are absurdly hypocritical. The JP Morgan CEO loves to talk about how crypto's only true use case is to facilitate crime, especially whenever he appears before the US Senate. Yet, JP Morgan is the second largest penalized bank and has paid $39.3 billion in fines for 272 violations since 2000. Since Dimon became CEO in 2005, the banking giant has paid about $38 billion in fines, one-tenth of the $380 billion fines paid by banks worldwide for violations. JP Morgan has been allegedly involved in and agreed to pay fines for several heinous crimes. Dimon continues to lay at the doorstep of the crypto industry. The bank was at the center of the largest cocaine bust in U.S. history, involving 20 tons of cocaine worth $1.3 billion, seized on a ship reportedly owned by a fund run by JP Morgan. It also agreed to pay a $75 million settlement over allegations that it enabled and financially benefited from Jeffrey Epstein's sex trafficking operations. In addition, despite Dimon's remarks, JP Morgan is involved in and profiting from cryptocurrencies and digital assets. Despite being a former Bitcoin and crypto critic like Dimon, BlackRock CEO Larry Fink is quickly becoming a huge crypto industry advocate. Let's get back to Anthony's interview as he talks about Larry Fink's incursion into crypto and why his intentions can be trusted.
I met with Larry Fink in November of 2020. I was in 2021, because it was closer, 2021. I was in the lobby of the Four Seasons Hotel in Abu Dhabi, on the El Mariana Island where the global markets facility is for Abu Dhabi. We were standing there together. He says, "You really like this Bitcoin?" I said, "I do." And then he looked at me and said, "Bitcoin sucks." I said, "It does?" He goes, "Yeah." He goes, "It's a stupid asset. It totally sucks." He goes, "But I just made an investment in Circle. I think the blockchain is good. And I think that the stable coins on the blockchain will be successful." And so BlackRock just made an investment in Jeremy Allaire's company. I said to Larry, "Okay." I said, "I think you're wrong. I just think you need to do more homework." Now, there's a guy named Robbie Mitchnick at BlackRock. He's a young kid. He came into BlackRock with the idea of creating a Bitcoin ETF. He orange pilled Larry. And I'm going to give Larry a lot of credit because Larry actually did the homework. Larry did the reversal. Larry was on the road to Damascus and converted as a result of being steeped in understanding exactly what it was and why it will be an international store of value. And I got to tell you something, it takes a very smart leader to pridefully say that Bitcoin sucks, and then 24 months later say, "You know what? I've got this wrong. BlackRock needs to be a part of this, and BlackRock needs to have a significant stake in it." So no, I don't think he's just talking his book. He's not that type of person. And he has said two things that you should pay attention to if you're an investor here. Number one, it's a store of value. And number two, it represents a flight to quality, Scott. I want you to think about that. Okay, this asset has experienced 100 vols. Okay, it's gone from 80 to 100 vols. We've seen the asset go from 69 to 16. We've seen it do all different types of haywire things. But the largest asset manager in the world The CEO of that company says it is a flight to quality. Okay. So that implies that he understands it. Last point of the story, it's now 23. It's January. Robbie comes to see us. My partner, Brett Messing, who I don't think you've met, he says to my partner, look, I'm getting a lot of bureaucratic resistance at BlackRock. I need some outside money in this Bitcoin trust. So we sent them 10 million bucks. We said, okay, we're in. So we were the first money in. He then went to the ETF committee and said, we can raise outside money for this. And they said, okay, if you can raise outside money for this, let's give it a go. And they were watching that Grayscale case carefully. Their lawyers told them that Grayscale was going to win that case. And then they dropped the application.
And the first thing Larry Fink said after the Bitcoin spot ETF was approved was, we need an Ethereum spot ETF. Do you think that it's coming soon?
Okay, now here's how you know he's been completely pilled, okay? We need an Ethereum spot ETF. And oh, by the way, we're going to tokenize all these assets. The future of exchanges is going to be tokenization. Okay, so he actually has taken it a step further. It's not just, okay, I got a Bitcoin ETF. And remember, they're charging 21 basis points. Okay, is that going to really move the needle at BlackRock? No. So he's doing this because of the intellectual gravitas associated with it. And he's doing it because he wants to be at the forefront of it. And he's also recognizing that, he's playing the back nine of his career. And he knows that part of his legacy will be, was I a visionary leader or did I get stuck in 1987?
According to Anthony Scaramucci and other prominent investors in the space, the marketing for these ETFs is not in full swing yet. This is very bullish because it means we can look forward to spectacular price movements after the GBTC sell-off tapers to a halt. According to senior Bloomberg ETF analyst Eric Balchunas, that might be much sooner than we think. In his latest update about the GBTC gouge, Eric notes that the outflows seem to be coming to an end. His post reads, GBTC outflows today were only $425 million, the lowest bleed since day one and seemingly trending down. That said, it's still a pretty large number. This number confirms the futility of looking at wallets all day as some kind of predictor of flows. If anything, volume has become the best predictor. Low volume equals less bad outflows. Do you think the GBTC sell-off is almost over, and Bitcoin is about to take off again? Please drop your replies and comments on Anthony Scaramucci's post in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. Thanks for watching.